For our last panel of the day on the DeFi Renaissance track, we're going to be talking about yield markets and the ability to trade future rates on on-chain yield-bearing assets. And particularly, we're going to focus on the intersection between a yield-bearing asset like Athena's SUSDE, a yield market such as Sean Hu's RateX or Pendle, and then the utilization of principal tokens on a money market like Aave. So before we get into the nitty-gritty of that, Guy and Sean, would you like to give some brief introductions about what you're building?
Sure. So my name's Guy Young, founder of Athena, which came out to market about 2 years ago now with our synthetic dollar product. In a very short summary, what we're doing is tokenizing a cash and carry in the form of an asset that looks and feels a bit like a stablecoin. And yeah, since coming out around a year and a half ago now, grew to just over $6 billion in that period of time. It was the fastest growing dollar asset in crypto history. And yeah, excited to chat through things today.
Yeah, my name's Sean, and I'm the co-founder and CEO of RateX. RateX is a yield trading protocol building on Solana, and we are currently the leading yield trading protocol there. And the RateX for yield trading protocol is basically a marketplace for the users to speculate and hedge your yield risk of your holding yield-bearing asset. Yeah, that's it.
Yeah, so perhaps our audience is familiar with the mechanics of something like Pendle or RateX, but just so we can all be on the same page on the more technical concepts, what is a yield market? What is a principal token or PT? And then what is the yield token and YT?
Yeah, I think that's a very good question. Since, as I have just mentioned before, I think a yield market is basically a marketplace for you to speculate or hedge the future trends of the yields of any underlying assets. And what we are doing right now is basically called yield tokenization. We're basically splitting the yield part and the principal part of any yield-bearing assets, and create a marketplace for them to trade. So basically, in RateX, we provided a YT trading pair for users to trade the YT, to trade spot YT, or even with margin. So this is RateX.
Guy, SUSDE is perhaps the most successful yield-bearing asset to receive a listing on a yield market. We've historically seen anywhere from 30 to 60% of the SUSDE supply utilized on Pendle, and SUSDE makes up generally more than 50% of Pendle's TVL. So what characteristics of SUSDE make it such a perfect fit to be utilized on a yield market?
Yeah, I think two main pieces are the scalability around it and then the volatility of the yield. So to start with the first one, I think there's not that many sources of cash flow within crypto that you can actually scale to multi-billions in size to back a stablecoin. And if you're going to be trading those rates, you need a market that's spitting out a lot of cash flow in order to make two sides of those markets for people to trade. So until SUSDE came out, we didn't actually have a form of scalable dollar asset in the space that could actually spit out that amount of cash flow for people to take two sides to the market. And then the second one is that the funding rate, which is essentially the source of yield within SUSDE, is extremely volatile. So when Athena first came out at the beginning of 2024, the yields are around 50 to 60% for the first couple of months, and that can go all the way down to zero or sometimes even negative. And that volatility basically introduces something that people actually want to hedge or take out on the other side of the market. So I think one good counterexample here is something like stETH, where stETH is extremely scalable, but the yield on stETH is kind of always around 3-ish%, and no one actually wants to take a very strong view that it's going to diverge from that number either up or down looking forward. So I think that that's kind of what enables people to actually speculate on the market, which is you have underlying volatility within the rates, but then also a liquid and scalable enough market that you can grow into. Yeah.
Yeah, so effectively there's very low volatility in the principal value, but then high volatility in the yield component, which makes the yield market a perfect place to hedge and trade that. And we've historically seen a number of yield-bearing asset issuers basically utilize yield markets as a go-to-market venue where they will run a boosted points program either on the liquidity provided or on the yield token. So I'm curious, what are the particular benefits that a yield-bearing asset issuer will get by basically spending on incentives for a yield market?
Yeah, I think for the yield-bearing asset issuer, most of the yield-bearing asset issuers, if you think that the future airdrop or the point system is a major way to boost your market, I think the yield market is probably the most capital efficient way to boost your TVL. Since if you just trying to use lending market and create a trading pair to boost the TVL, it makes the users to double their payments. It's not just to double their investments because they need to buy the underlying asset and another token to create a trading pair. But in the yield market, you deposit your liquidity as a liquidity provider, or you buy the YT or buy the PT. That makes I think that will probably be the most capital efficient way for the yield-bearing asset issuers to boost their TVL. I think that's probably the major motivation for them to use the yield market. And probably yield market is one of the most important use case of their assets.
And Guy, you've done something similar with boosted sats on the SUSDE YTs. I'm curious your diligence process for determining to incentivize that venue in particular.
Yeah, I think it's basically just recognizing when you're going through the bootstrapping phase that different users want different things, and so some want the upside exposure to having your token and seeing where that goes and wanting to ride that. And then other users are really just in there to get a fixed return and have like no interest whatsoever in taking a view on the underlying project itself. So I think that's one of the interesting things that these platforms unlocked, which was you could more easily cater for those two different types of user bases in your go-to-market rather than forcing everyone to take a view on the token. And I think you just more efficiently match like the preferences of different users in doing that. I think one of the interesting byproducts that was actually unlocked by getting a large and scalable base of fixed rate assets was actually what you could start to do on money markets afterwards. So we sort of pioneered with Morpho and Aave, a completely different type of market that never really existed in DeFi until we came out, which was essentially collateralizing fixed rate assets with variable rate borrow on the other side. And what that enabled was users to come in and actually get leveraged exposure to the differential between your borrow rates and the fixed rate collateral. And I think to me it was actually one of the best examples of sort of DeFi composability coming together in a pretty incredible way. I think when we came out, you had Athena importing the basis from centralized exchanges, you had Pendle turning that into a fixed return, you had Sky lending against that collateral within Morpho, and it was like 5 different projects within DeFi, all sort of like seamlessly composing together to create like a net new product that hadn't existed before it came out. And I think to me it was one of the best examples of just like the money Lego sort of thesis of DeFi coming together in a cool way.
Certainly. So if you're an airdrop farmer, you can put up $100 on the underlying to get X exposure to the airdrop, or you could maybe buy a YT on a yield market for $7 and get the exact same exposure to the airdrop. So for the users, it's dramatically more capital efficient for that end goal. But then concurrently, if you're boosting points on the YT, we see that traders will then pay a premium to the underlying yield to get exposure to the YT, which then prices the implied yield on the principal token even higher. And with the higher yield on the PT, this makes it much more attractive as collateral on a money market. So I guess I'd like to segue into that venue, which is the utilization of PTs on money markets. At the start of the year, PTs were listed on Euler and Morpho. There's only about $500 million in collateral. But then about 2 months ago, Aave listed principal tokens starting with Athena's products, and in about 2 months added $2 billion in collateral, perhaps their most successful listing. And I believe that's about 50% of Pendle's TVL is now collateral on a money market. So I'm curious, as the yield-bearing asset issuer, what additional vector of utility does this add to for your users when they can take the PT and then leverage it on a money market?
Actually, I think from my point of view, if you're a yield-bearing asset issuer and you're basically a conservative investor, and I think that probably the best way for you to invest is to convert your underlying token into a PT and deposit into the money market and to achieve the loop strategy. I think the advantage here is that if you're holding a PT, at least you can control you have a fixed yield on your asset side. So the only uncertainty here is the borrowing rates. So once you can make sure the future borrowing rates can be keep lower than your fixed yields, this strategy is profitable. But if you're an agile farmer and you're highly speculative, and I think probably the best way for you is for you to invest is to keep to buy those YTs, and sometimes the followers will push the price of those YTs much higher than the fair value. So probably you're only a points farmer or leverage points farmer. You're basically a trader. You can make money from the followers. Yeah, I think that's what I thought.
And Guy, do you think from the borrower's point of view, do you think borrowing against a fixed yielding SUSDE principal token is more attractive than borrowing against the SUSDE outright?
Yeah, for sure. I think these are savings products, right? And people don't really want to be touching and interacting with savings products every day. I think the best savings products actually are you put your money in it and you don't think about it again and you leave it untouched. It's not the same as sort of trading spot or leverage. And so I think as much as you can give people certainty over some period of time defined forward, that's the return that they're going to get, it's always going to be something that they like more, especially when you're doing it on leverage. So the leverage piece, when people are doing this with SUSDE, if you're not tracking that down to the week where volatility in the rate can be extremely high, you could be bleeding like 1 or 2% unlevered before obviously adding like the effects of leverage after. And so yeah, I think using PT collateral just gives people that forward certainty while they're doing that, and as a savings product, that's what people are after. Yeah.
That's great. I would also love if you could discuss what you're building with Converge, which I know will have instances of these core DeFi applications like Pendle and Morpho, but then also a KYC curated institutional product with IUSDE. So we'd love to learn more about what your goal is with that. But then also, as you talk with this more institutional audience, I'm curious how you gauge their appetite for SUSDE outright versus something like the principal token.
Yeah, I think the view that we have is if you look at TVL within crypto, like since 21, there there hasn't actually been much inflows when it comes to just comparing the gross TVL sitting within applications, where at the moment it's roughly 30 to 40% below the peak that we actually saw almost 5 years ago. And to me, that was a pretty strong demonstration that we had done a pretty bad job of actually getting this kind of capital to come on chain. And really the only source of inflows that we've seen this cycle are BTC ETFs and then stablecoin supply going up. So the view that we have is that a dollar with the yield is like one of the very few products that appeals to almost every single financial institution on earth, right? Whether you're a hedge fund, credit asset manager, whatever it is, a dollar with a yield is something that has a place in almost anyone's portfolio relative to like $100 trillion fixed income market that exists. And what we're trying to do here is just say, how do we wrap up these crypto primitives with unique properties, unique return profiles, and putting them in a format that TradFi can actually digest on the other side? And one of the issues is that no matter how good the return or profile of something looks, most real financial institutions can't get comfortable with like zero KYC interactions with people on the other side. But I think one of the interesting things about Pendle and the yield trading platforms is actually that 80% of the actual notional volumes that you see flowing through those platforms is like a group of less than 30 people who are actually controlling all the flows that sit in there on the YT side. And so basically just being able to put a thin layer of saying, you as an institution coming to actually sell and collect the fixed yield on SUSD, so long as you know who the 20 people are that are sitting on the other side, it's actually not an issue for you to interact with that protocol in that way. The only issue sort of comes up when it's a completely unknown, are you facing off to a North Korean that's sitting inside the pool on the other side? And so that's all we're trying to do, which is take an asset that we know has product market fit within DeFi applications right now, and then trying to put it in a format where you can actually digest it within TradFi with a few guardrails that sit around it. Yeah.
One thing I think is very cool about yield markets is we get the price of an instrument basically at various points in time out in the future, which very much starts to look like a traditional futures forward curve or term structure. And back in December, the SUSDE forward curve on Pendle was 33% fixed on the front month, but maybe 24% on the back month. And then now it looks somewhat flatter or more like contango. So you can look at the curve and see backwardation and contango. So how can traders use the information presented on these markets to basically gather insights about what the market is pricing into the future? Hey, Sean, we can start with you.
Yeah. Actually, I think the term structure is probably one of the most important concept in TradFi. And once you have the term structure, you can achieve a variety of different kinds of trading strategies. And I think let's take Ethena's SUSD as an example. Since Ethena's the yields of SUSD is basically it actually reflects the future expectation of the perp market. So once the term structure is upward sloping, so you can basically borrow at the short term and buy the long term assets. So I think this is a very traditional carry trade strategy for fixed income investment. So I think the term structure is pretty important, and we do actually expecting more and more underlying yield-bearing assets has its own term structure. Yeah.
Anything on that, Guy?
I'm just interested that it was a pretty good indication of where the market was going, right? So when you're describing that sort of peak in December and then falling rates, it was actually a forward indication that the market was going to cool off quite a bit, and the market was right in what you're describing there. So I think the rate market is actually a pretty good indicator generally of froth and or where the market's heading in the very short term going forward. One interesting data point that we saw in the last 2 years was that every single time that funding rates actually average below risk-free rates in the real world, it tends to be like the bottom of the market within like 2 weeks of that happening, because if crypto's demand for leverage is that low that you're actually charging less than financing the US government, it's a pretty good sign that like almost all of the froth has sort of been taken out of the market. So I do think the rate market is a pretty good indication and thing to sort of keep your eye on for sentiment.
Yeah, so the SUSD term structure on Pendle has a ton of information about how the market is pricing the future to unfold. Sean, since the start of the year, we've seen liquidity on Solana yield markets, RateX included, be growing at a pace of about 600% annualized. A majority of this is attributed to fragmentric restaked SOL. So I'm curious from your point of view in the Solana space, what other assets would you expect to see a lot higher utilization on RateX? And you're also welcome to use this as an opportunity to introduce any points about V2 that you'd like to share as well.
Yeah, actually, I think on Solana, I actually expect more on the stablecoin side. I do see some very interesting yield-bearing asset issuers on Solana doing pretty interesting things. Like they use the JLP, the Jupiter's LP token as an asset, and they use some kind the delta neutral strategy, just like what Ethena did, and they can provide a pretty impressive APY. But although the capacity of this kind of strategies is relatively small, but I think that's a good try. And I think that's what I just want to mention. And another thing is our RateS V2. I think RateS V2 is not just like Pendle's borrowers, something like this. Since Pendle just is still digging into the yield trading side, they're just trying to bring margin yield trading, different yield margin yield trading products. But RateS, the current version of RateS can support margin yield trading actually. And our V2 actually supports, I would like to say it's more like a leveraged token market. We actually expand to the token market, the general token market. So it's a more generalized model for the I would like to say it's a kind of structured leverage layer for RateS V1 and RateS V2. And I think the direction of RateS is a little bit different from like Pendle.
Gotcha. But at large, it encompasses the ability to basically host a yield market for off-chain assets as well.
Yeah, actually, for those off-chain assets, actually, I do think that the private credit it's a very, since many people just trying to bring the private credit assets on chain. I think that's pretty impressive. It's pretty important. Let's just ignore the quality of those assets, but I think this is a very important step. It's a very important step, since once the traditional asset issuers find that even shitty assets can be bought in crypto, and they have the they have premium here, and the better quality assets can be listed on chain. So I think that's probably a positive flying whale, and so I think this is probably the first step. Although the asset quality is probably not good enough, but I think that's important.
Yeah. So whether it's like RateX V2 or something like Pendle's Boros, which is moving towards like a classical interest rate swap market, beginning with centralized exchange, perpetual future funding rates. I'm curious, Guy, if you think Athena, the protocol itself, would end up being a customer for something like Pendle's Boros to be able to basically hedge the interest rates, or funding rates rather, that it's receiving?
Potentially, but I think the demand side of this two-sided marketplace is a little bit unproven. I think a lot of the demand that comes through both RateX and Pendle still has an element of you're trying to get token exposure, not just taking a view on the rates. And I do have a question over who's going to be stepping into a market and saying, I have a different view than Athena on where funding rates are going in the market, especially because we're at the size that we can actually determine where the funding rates go to a certain extent. And so my skepticism is a little bit around who wants to come and trade against us, because yes, we would like to hedge that, but I'm not sure who wants to stand on the other side.
Yeah, so it's only so useful to the extent that you have a counterparty on the other side who isn't going to get liquidated and your position won't get closed out against them. That might be hard at Athena's scale. As we come up on time here and need to wrap this up, stepping back, if you had a friend who is building a yield-bearing asset issuance protocol, would you recommend to a friend that they pursue a listing on a yield market?
Yeah, definitely. I would do recommend it. I think at least the points incentives and the point incentives, yield market and money market, this whole process still works. And I think this way can still be successful over the next 1 or 2 years. So yeah, I think my answer is yes, definitely.
Yep, I think it's a great go-to-market strategy. Worked many times this year and would recommend. and thank you to our panelists. This is the last session of the day, so want to invite you all to our happy hour in the courtyard right after this. Thanks very much.